And on Thursday, we saw all the reactions to the Fed announcement. MBS were up 3 basis points in the morning. Bonds were roughly unchanged at the start of the domestic session after remarkably flat trading in Europe, considering the juxtaposition of central bank announcements. We got the Fed yesterday and ECB today. There was ultimately an almost perfectly flat response to the ECB announcement. The only notable cause and effect so far was the modest increase in yields following the labor cost data and inflation implications, but with a lag. So we got jobless claims in America. They came in at 242,000 on a 240,000 forecast. It was 229 last time. So jobless claims have gone up a little bit. Q1 labor costs came in at 6.3 on a 5.5 estimate. So there's fewer people with jobs, but it's costing more money. It was 3.3 last time. So the labor costs are going up quite a bit. Challenger job cuts. So there were 66,955 job cuts on an 89,000 estimate. So we got kind of some conflicting data on that stuff. The ADP model is fairly new, so I think that we're still kind of working through some kinks on that. Yesterday, the Fed raised the rates as expected, another 25 basis points, and dropped hits that it may pause next month, despite Fed chairs' comments that rate cuts are not likely and the inflation remains a stubborn problem. Markets are anticipating rate cuts as soon as July. I ain't buying that at all. I don't think they got their finger on the pulse well enough to figure that out. Basically, markets believe that the Fed is fighting a battle that is already over. Don't agree. News broke around 7:30 Pacific time that Western Alliance Bank has hired advisors to explore the sale. I've heard people say locally, because Western Alliance is heavy here in Phoenix where I'm located, that that's not happening, but I bet you it is, and this could send some ripples through our industry, as Western Alliance is a giant source of warehouse funds, which is the money that most independent mortgage bankers use to actually fund loans and hold them until they can sell them. So that's going to be a mess if they are selling. The bond market is already strong due to the regional bank situation, with Pacific West falling 50%, so there wasn't much reaction to the new language on the long end. Although the 2-year did rally on the announcement, the Fed fund futures are now predicting the Fed will do nothing in the June meeting and a 50-50 chance of a rate cut in July. Too soon. The futures are not factoring any more rate hikes, and they see 75 basis points easing by the end of the year. Prepare to be disappointed on that one, fellas. Non-farm productivity fell 2.7% in the first quarter as output rose 0.2%. The March trade deficit narrowed to $64.2 billion from $70.6 billion in the prior month. The regional banks are getting slugged today. Like I said, Pacific West down another 40%. First Horizon down big after its merger with TD was terminated. Western Alliance is down despite a press release that updated the markets on its deposit situation. Zion's is down as well. If anything will push for Fed cuts, this is going to be the catalyst. Bonds spent time on both sides of unchanged today, with much of it in this territory that challenged the prevailing range. If yields had to point to one reason to be trading near multi-month lows, it would be uncertainty around the banking sector. Without that, one would argue that bond buyers were a bit offsides relative to recent data. At the end of the day, MBS were up 14 basis points, stocks were down 30 points, and the 10-year was up just 2 basis points. So the Treasuries actually the MBS outperformed the Treasuries today. So with 5.5 ending up at 101.05, that is putting us right in the middle of this kind of wide range. We got enough data for a new Fibonacci line at the 101.34. So you can see by the narrow ends of the candlestick, we had a lot of movement today. The net wasn't much movement, but to get there, we went a long haul. We also got a post from our sponsor at wellthatmakesense.com, where it actually kind of went to a quick explanation of how does the Federal Reserve change interest rates. It's not just a little slider on their iPhone.